What's going on, everyone? Welcome back to the channel. Thank you guys for watching and clicking on this video. So in today's video, I'm going to be going over, should you be compounding your account or should you be withdrawing money every week, month, quarter from your account, right? There's no right option, but I'm just going to be discussing in what scenarios it would make sense to do both. So first of all, let's start with compounding. So compounding, if you don't know, is just, keeping your profits in your account and taking your account from, let's say, 10,000 to, let's say 20,000, right? So this is good for someone that is a beginner and doesn't have a lot of capital, right? There is a danger with compounding that, you might not be able to get out with profit, right? You could go from 10,000 to 14,000. But if you never withdraw, then you could go back from 14,000 to 10,000. And we don't want that. So compounding is good if you are a consistent trader that's showing signs now of profitability and making money, but your account is not the largest account, right? $10,000 account, it's not the largest account. For futures, it is pretty decent, but to get 4 or 5 contracts of buying power, you would have to basically be risking your full account, and you would need money in your bank account to make sure that you're not gonna blow up your entire account, and you could put more money in, and you're treating the money that's in your bank account as part of your trading account, but just not putting the actual full amount in there that would be at risk. So yeah, compounding is best for a beginning trader with not a lot of capital, but showing signs of profitability. And once again, it is extremely important that when you are taking your account from, let's say, 10,000 to a decent amount, like now 14,000, that you don't start getting overconfident and say, oh, I'm up 40%, now I can go take extreme risk, because that is exactly what would put you back down to 10,000, right? And when you are compounding, let's say you do go from 10,000 to 14,000, if your account gets to 12,000, right, from 14,000, I would withdraw that 2,000 and then restart to try to get to 20,000, right? I would make it a point to withdraw, just have a certain cutoff. It could be whatever you want, but just something, because it would be so pointless to go from 10,000 to 14,000 back to 10,000 and dip below. You had $4,000 of profit, and you just didn't take anything off the table. That is stupid. And that's what I'm trying to help you guys avoid, because I've been there where I've made a lot of money but didn't take anything out and then just blew it all, right? Because I got very, very overconfident and thought that I had a way larger cushion than I had. But just because you have a large cushion doesn't mean that you can't just take bad trades and lose it all. So yeah, that's for compounding. Very, very good strategy for multiplying your profits. But in my opinion, I do prefer the withdraw. So the reason why I like withdrawing is because it's still like having a compounding account, right? I could, let's say I take 4 $1,000 trades, right? That would bring me to, if I had 10,000 to a $14,000 account value. But if I just withdraw that, right? If I just withdraw that, and now my account value's only at 10,000, but that $4,000 is now in my bank account, well, I still have that money, It's just what's in my actual account is only 10 grand, but I banked $4,000. And at any point, I could just transfer that back in for more buying power. But this $4,000 now is safe. Remember, anything that's in your trading account is at risk. Anything that is in your trading account is at risk. That is also why I advise that if you have if you could put in $50,000, only put in like 10 grand and keep the other 40 in a bank account, because that 40,000 is not going to just disappear in your bank account. It's safe there. This 10,000, you could accidentally leave an order open when you're away from your computer and come back and see your account's at $1,000 because you just got liquidated because you forgot about that. Imagine if you had, that in a $50,000 account, all your money. That could easily happen, right? And again, futures is such a highly leveraged product that you don't need to have an insane amount. This is not stock trading, guys. You don't need $25,000 minimum to be able to actually trade, right? Put in like 20% of what you actually would want to put in. Just put 20%. That's all you need. And then just keep the rest in there. And let's say you blow your entire amount that's in there. Well, that now your account is technically at 40,000, right? And you can put in another 10,000 and replenish it. So you're technically down from the amount that you would want to put in, 50,000 to 40,000. Right? That's how I like to do it, and that's how I think about it. But withdrawing your profits, in my opinion, is just like the safest way. And if you want to start now, being able to take double the size at 20,000, well, just withdraw your profits until you get to $10,000 in profit, and then, if you want to, you can go and deposit that back into your account, and now you have 20,000. Now again, that would be at risk, right? But then you can essentially guys, it's not a guaranteed thing. This is always for examples, right? Super simple examples. But now this 20,000 would be 40,000, let's just say, right? And now you can go and withdraw, that 20,000 of net profit back to your bank account, and maybe now you're comfortable at 20,000, and you can consistently make, a couple grand a month plus from 20,000, and you're fine with that. You're not trying to get to $100,000 a month where you need a 6 or 7 figure account. Boom, there you go. Right? So that's why I prefer withdrawing over compounding. This scenario, it's literally the same, but you're just withdrawing it to your bank account. And just a quick little tip here, I would also recommend that your first, couple $100, your first 100 to $500 that you make, that you just automatically withdraw this and spend it completely. Withdraw it to your bank account, convert it into cash, pull it out an ATM, and go do something with it. Buy some new shoes, buy some food, do this or that. Whatever you want to do, whatever you like, just spend some money that you made from trading, because I'll tell you right now, trading figures and amounts barely seems real, right? You put $500 in front of me in all 20s, it's like, okay, that's a solid stack. You put up or down $500 on, my brokerage account, that's like, is that even real? I don't feel it. And that's the most important thing, is that yes, you don't want to totally feel the amount that you're making or losing, but you want to make sure that you just don't forget that's real money. That's the most important thing. Don't forget that the money that you're making is real money. It's not a game where you just get 20,000 XP and you can't do anything with it in real life. You make $10 in a trading account, you can withdraw that and go and buy Chipotle, right? You earned that. So just remember, it's not all about getting to the highest amount possible in your account. It's about getting to whatever size account is good for you that you can make and take positions to be able to make whatever amount you're trying to make, and then withdrawing that and spending it. That's the most important thing. That's all that matters. So I hope you guys enjoyed this video. I hope you guys learned the difference between compounding your account and withdrawing your account. If you guys did, if you guys could just like, comment, and subscribe, make sure you hit that bell so you keep getting more videos just like this one. And once again, guys, thank you guys so much for watching. If you're still watching in this series, I know that you guys are going to be super, super close to profitability very, very soon. Thank you guys again for watching, and see you guys in the next one. Peace.